Valens Research, Uniform Financial Analytics.
Hubbell, similar to Integra, might be a bit off the beaten path for some of you because of the fact that it is a smaller industrial machinery manufacturing company. The core part of what Hubbell does, and they have several businesses, but the main part of their business, which is interesting, is they make the equipment to make smart grid possible. And so you would think if you look at the as reported metrics for Hubbell, what you'd see is a business that actually has decent profitability. You know, its returns in terms of 9% to 10% historically were, call it basically 2 times what the, if you will, long run cost of capital is. But what's really interesting is ever since Trump and the current administration pulled us out of the Paris Accords, et cetera, right, when there's been less demand and need, you would assume, for smart grid investments to reduce emissions, et cetera, well, Hubbell's returns have started to roll over. And you might look at that and you'd go, oh, it makes sense that this company is trading at a discount to the market at a 16 times PE because returns are rolling over because this administration basically destroyed demand for the company's business. It's only, though, when you look at the uniform accounting, true blue profitability of this business, when you realize that's actually a wrong conclusion to make. This company hasn't seen returns fall the last 4 years. Returns have ramped up because of the fact that even through all of this, more and more utilities have demand for Hubbell's products and are investing, and therefore Hubbell is seeing returns expand. And that's really important because that changes the context. When you look at the as reported returns, it would make sense that these white bars are pricing in returns to decline going forward, because the fact the market's basically saying, yeah, because of all the things that we've seen happen in terms of the macro factors, we'd expect this to be a weaker return business. But if we realize instead that no, I mean, in reality, right, we've still got utilities investing in this innovation. And after a 1-year dip in 2020, just like every single company's having right now, it's likely that that could even expand, right? What we can actually see is returns have been trending higher. And if we expect that to continue, this is a company that might have 40% upside, even if returns just plateaued at 2019 levels. If they expanded because of the fact that we see continued growing demand for smart grid technologies, well, you could see even significantly higher valuations for this business. But you wouldn't even know to have this conversation and run these kind of scenarios if you look at the as reported metrics, because you would look at the as reported metrics and you'd go, oh, no, you know what? It's already a declining business. There's nothing to see here and nothing to do here. Let's move on to the next idea, completely missing that you're actually seeing a company that has improving returns, not declining returns, and the market doesn't get it. And that's the power of the kind of signals that we can see with uniform accounting, but also, as you can see, the power of the quick scenario analysis that we can do here also.
Valens Research, the world's leading source for uniform financial analytics.